Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon, and it's a lot cheaper than Jeremy LaFufu's Discord / I don't know what else he does. Trash. And I'm a hater of Jeremy financial education. And it is my goal in life to expose this total degenerate loser as a fraud that he is. Now, in this video, we're going to go back in time. And we're going to analyze one of Jeremy LaFufu's stock picks that has since been decimated. Because I want to know what his logic was. And actually, funny enough, this is exactly a year ago. I just noticed that. It's the 19th of 2022. He made this video February 19th, 2021. And in this video, he talks about why he bought Corsair. Now, unlike most of my videos, I actually did watch this in advance. And I did put some timestamps on there so we can jump around and listen to his logic about why he bought Corsair. Now, if you don't know what Corsair is, it's a gaming company that basically makes like gaming hardware. Okay, you can like go on their website. They have high-end stuff, keyboards, mouses. You can buy, stuff to customize your computer. That's Corsair, bro. It's the future, bro. Now, Jeremy got into the stock because it went up pretty fast, man. And ever since then, he's been freaking decimated. So let's listen to Jeremy in his own words on February 19th, 2021, exactly 1 year ago, and see why he bought this stock. And I'm going to show you why he's a total freaking clown. Let's go. Let's listen to his intro music.
Welcome into this exciting video here today. I hope you're having a smashing day as always out there.
Now, the funny thing is, he stopped making his intro music, I suspect partially because of me. Because you can't do exciting music like that where you're like rocking and, bashing your head to, hardcore, I don't know, what is that, EDM? What is that kind of music? EDM? Dance? When your stocks are getting freaking decimated. Strongman just got back from the bar, and he's a happy boy. All right, now let's jump again. Let's jump ahead and see what LaFufu has to say about Corsair.
In front of themselves, and that is this company. It is also a very profitable business model, and the profitability is going up substantially, actually much more rapidly than the revenue is, which is one of the best things you can ever see in a stock. And on top of all that, the valuation is actually fairly dang low for this stock.
I know all about valuations. It's the future, 4B. Now, if you don't know a lot about Corsair's story, basically, during the pandemic, the stock had a good year because everybody was locked down, everybody got stimmy checks, and if you wanted to work remotely, and you perhaps needed like a high-powered computer, or maybe you were bored and you wanted to play games, and you got a stimulus check from the government, some families got $7,000, $8,000, I mean, holy crap. What do you think a lot of these people did? They probably went online, I need a nice computer for work, or I want a nice gaming computer, and they went and bought something from Corsair. So Jeremy, in all his wisdom, could not have possibly foreseen that the massive increase in Corsair's revenue and very profitability was simply due to the pandemic, where everybody had to work from home and probably needed some good computer equipment. No, there's no possible way that could have happened. Now, he also says the company's very profitable. So here, I don't know if you can see it very well. I don't know if I'm going to zoom in, if it's going to screw up everything. Yeah, it screwed up everything. But the net profit for, what is the profit margin? The net profit margin for 2018 was negative 1.5%. For 2019, it was negative 0.8%. And then for 2020, during the pandemic, it was 6.1%. And then for 2021, it was 5.3%. Now, Jeremy apparently thinks 6.1% is very profitable. I don't understand that logic. Maybe I'm an idiot, but a company that was losing money on a GAAP basis for the 2 years before the pandemic and then turned a profit when everybody was locked down at home and needed computer equipment, and it only had a 6.1% profit margin in 2020, that doesn't strike me as very profitable. As a matter of fact, that strikes me as very freaking risky. But let's keep watching the video because he's a genius. Now, let's see how much Jeremy actually invested. Corsair,
$1,000 worth of this stock in my main private account, okay, which accounts for 2,700 shares. Then in the public account, I bought a little over 104,000.
All right, so here it is. His cost basis is $39, basically $40. So this freaking idiot, all right, everybody's locked down, everybody needs computer equipment. I guess the stock went public September 2020. He literally almost bought this at the top. So it looks like it peaked at $51. He bought it at $40. It's currently $22.63. I wonder if he did some kind of discounted cash flow analysis. Oh, no, he didn't. He only looks at revenue and forward PE, which you're going to see. So everybody's locked down. Everybody's getting stimmy checks. Corsair skyrockets because it's a, computer gaming / hardware company. What a shock that it freaking crashed once the pandemic started to ease up. Wow, I can't possibly imagine that. So this clown paid $40 for this freaking company for one share of stock. What a freaking joke. All right, let's hear Jeremy brag a little bit more about why he's so good at picking stocks.
We'll invest in companies sometimes that have, market caps of tens of billions or hundreds of billions. But at the end of the day, $1 billion to $10 billion companies has always been my specialty and still is to this day. Because what I find is there's a lot of companies in those brackets that have proven enough to make me feel comfortable investing in it, like this company has, but still have crazy growth ahead of themselves for the next.
It's my specialty, bro. Now, if you don't watch Jeremy Financial Education a lot of his stocks have been down 50, 60, 70, 80% over the last year because he bought a bunch of hyped up, unprofitable garbage trash. But it's his specialty. I bought Corsair at $39, and then maybe I average into it because I take money from my fans and buy stocks with it. But it's my specialty, bro. Yeah, man, you've done a really good job, haven't you? Jeremy Lafifi. I love it. All right, let's hear a little bit more about why he thinks this stock is going to do well. What's the macro picture? What's the big picture, Jeremy? I want to know.
Going to be bigger in 5 years from now than it is today. I hope every single person.
And yes, there's an ad coming on. I don't want to hear your freaking crap.
Person watching this video.
Some vegan meat companies got smashed in their latest earnings report. Some high-tech fitness companies
said, yes, of course gaming is going to be bigger in 5 years from now. Is it going to be bigger in 10 years? Yes, of course, okay? Gaming is a growth beast. It's a huge growth category. It's one of the most phenomenal spaces to be in, and the total addressable market is unlimited here. What do we also know? We know Corsair.
It's unlimited.
Corsair's products are highly relevant and a ton of gamers love these products. And we also know they don't just buy these products, but they love the product, okay? They leave reviews and the reviews are high for these products. And that is absolutely amazing, in my opinion.
Now imagine buying one stock because the gaming industry as a whole is going to be bigger. And I agree, it probably will be bigger in the future. Imagine buying one stock because you think the gaming industry is going to be bigger. And also looking at reviews of the company's products as one of your main bull theses. If you believe in gaming and you believe it's going to grow at a certain rate, why don't you buy like a gaming ETF, okay? Why would you buy one stock and attribute the future growth of gaming to that one stock? The stock and the growth of the gaming market are two entirely different things. The company or stock could be total freaking trash, but it could still be true that the gaming industry as a whole is going to keep growing. There's plenty of gaming companies that completely went out of business, but gaming grew pretty significantly. Great logic, Lafufu. Let's see what's next. All right, here's another reason why Jeremy bought this stock. This is freaking hilarious.
In the end, okay? I feel Corsair has actually a cooler vibe than actually companies like a Logitech, right?
Right. It's got a cool vibe, bro. It's got vibes. We vibing, bro. Imagine buying a stock because it gives you a cool vibe. Yeah, that's how you build wealth. Jeremy Lafifi. I'm really convinced that I should be buying Corsair at $39 when it was unprofitable before the pandemic. Of course, Lafufu. Now, let's see him talk about earnings. Okay, this is very interesting what he has to say about earnings. Where is it? A little bit ahead.
These numbers, ridiculous. Revenue was up 70% year over year. 70%. You're not going to find that many companies growing that fast, okay? Extraordinary. Gross profit in the most recent quarter was up 118% year over year. What a number. Net income was up hundreds and hundreds of percent year over year. So gross profit, net income, they're actually growing much faster in terms of percentage gain.
Isn't that kind of an indicator that maybe the company might have had a fluke year, possibly caused by the pandemic lockdowns? No, that can't possibly be the reason. Now, if a stock, let's go look at the financials a little bit. Now, this company wasn't growing that quickly before the pandemic. So I don't want to zoom in, but in 2018, they had $10.21 revenue per share. And then they had basically $12. So the company grew by 20% on the top line from 2018 to 2019, roughly 20%. And then you see this massive freaking spike in 2020. It went from $12 of revenue per share to almost $20 of revenue per share. That's the growth that he's talking about. It was because of the pandemic, okay? That was a freaking fluke. But the growth going forward is not going to be 70% per year. How could you possibly think that, you raving freaking maniac? This guy's analysis is a joke, okay? It grew at 70%. Woo! If you see something grow that quickly, take a step back and think about why that happened, okay? And, be very careful because growth like that usually doesn't continue going into the future. But if you assume revenue is going to grow like that going into the future, that's when you get your freaking cheeks clapped. Tesla. All right, let's see what Lafufu has to say about the future growth of the company. What do you have to say, Lafufu?
Growth to 10%. There's just no way possible. I think this company is going to grow probably 20% plus again in 2021. And if they do that, well, that's just going to be a very, very welcoming surprise. Let's just put it that way, okay? Now, valuation.
All right. So he talks about revenue growth and he talks about forward PE. Let's look and see if it actually grew 20%, because he said it was going to grow 20% in 2021. Let's see. So they had $20.27 of revenue per share divided by 1974. That was 2020. It grew by 3%, less than 3% from 2020 to 2021. It's going to grow by 20%. And it grows by 3%. All right, ladies and gentlemen. How can you listen to this guy? How can you possibly take advice from this guy when he has such bad calls like Corsair, okay? To me, when I first saw this stock, it was common sense to me. And I'm not saying I'm the best stock picker in the world. I buy index funds. But it was common sense to me that this stock benefited from the pandemic. But that growth and, all that stuff wasn't going to continue after the pandemic abated. It was a fluke and a one-time thing. But Lafufu attributed that one-time increase in revenue, profit, blah, 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 and projected that going forward, okay? The guy's a freaking clown and a doofus. Anyway, that's it. Like, subscribe, tell your friends about me. Y'all have a wonderful night. Chew!